Today I'm with Christopher Berlet from Stakeholder Gold. And Christopher, we've been watching and monitoring the gold price. Is it going to continue to trend upwards?
Most of the analysis suggests that it was going to continue to go higher. I personally believe it's going higher. Yeah, a lot higher. And you're going to continue to see central banks. I think that these tariff initiatives are going to accelerate the end of U.S. dollar hegemony, and ultimately you'll see significantly higher gold prices and silver.
And of course, Stakeholder Gold has been moving along, achieving milestones on a regular basis. And you recently put out some interesting news about your VLF-EM interpretation for the Sky Gold Zone. What does this mean? And provide us with an update.
Okay, in the summer last year, we did, well, in 2023, we found Sky Zone, very large gold zone on Ballarat. It's due north of Coffee. Kaminak was bought up for 520 million. That's the Coffee deposit principally, and due north, basically due north of the casino deposit also is where Ballarat, our project, is located in the center of white gold. We found this large extensive anomaly 2023 in gold and soils, calling the Sky Zone. I mean, we'd found evidence of it before that, but we really determined that it has some scale potential in 2023. Two subparallel zones, one of 1.9 kilometer strike length and one of 1.3 kilometer strike length. So, over 3 kilometers in total, a very large potential target. We followed that up this year with drone-supported magnetic survey, and we did ground-based soils and also a ground-based VLF survey, very low frequency, looking for low resistivity signatures across the lines for the Sky Zone. So the soils were done on another discovery, which looks like a copper porphyry target called the Low-Copper Zone. It's about 7.5 kilometers southeast of the gold zone. But at this stage, our assessment is this gold zone, and the VLF survey results suggest very large, wide zone, extensive, over 3 kilometers of strike length. We have golden soils open to the southwest on the southern the southern subparallel zone. So ultimately what we're saying here, and we're going to be able to determine in the summer of 2025. First of all, looks mineralized. The age of the rocks, the rock types, all suggestive of golden saddle. And size extent is a very real possibility for this. So we're looking at the potential for having a new major discovery in the center of white gold in the summer of 2025.
And of course, just allow me to clarify a couple of items here. So you're right in the area, and we of course have got a map positioned right above you as we're talking here. You're right next to the White Gold Company and the Coffee project, correct?
Coffee's due south of us. Coffee was purchased out for 520 million at $1,600 gold price. That's 25 times the market cap of Stakeholder today. And our assessment is that this Sky Zone has size potential that could be not dissimilar to that. We'll see. But that's a 25 times the market cap. 520 million they paid for that. Our market cap today is 17 million, and they paid for that at $1,600 gold price. So at this stage, the dimensions are sizable for the Sky Zone, and we have a lot of very compelling evidence. We're going to put a drill in it as soon as possible in the spring 2025. So that's the gold zone. Looks like a potential for a major discovery, I think, and we'll see. And then also the copper zone, Low-Copper Zone, separate and distinct discovery, 7.5 kilometers southeast of there. Also on the same property, just on the other side of the road that's being constructed ultimately through the property, and due north of Casino. Loki looks like it's 2.5 kilometers long and about 530 meters wide. Copper porphyry intrusive, similar to the Minto, which is due east. So two very compelling targets of size.
So I just want to understand just a little bit better. If I recall, you only have, what, 17 million shares outstanding? Is that correct?
Yeah, 17 million shares.
So only 17 million shares outstanding. We've got gold and copper, correct? Right next to the coffee project, as you just explained, but also about next to the white gold project as well, correct?
White gold is north of us, around to the east and to the west. It surrounds the property. White gold, and to the north, yeah.
Okay, so the shares are tightly held. We've discussed valuation of your neighbors, for instance, but in addition to that, you have revenue coming in through your quarry project in Brazil. Is that not correct?
Yes, and we're very happy about that. Started to accelerate again. Our blue quartzites, great business, generating cash. On the weekend, we sold 400,000 reais on the weekend that's just this past weekend. Anyways, and we've started a new white quarry, so it's our third quarry down there, and we're getting a very robust order book right out of the gates from domestic buyers and also Canada, US, and the United Kingdom. So listen, that business. We're expecting to make $1 million per year from each quarry, and we're expecting to be able to have 10 quarries operational by the end of 2026. Great cash flow business, great margins, and a very good way for us to maintain discipline in our capital structure.
It's my understanding that not only will you be attending PDAC, but you're actually going to be a speaker at PDAC. Can you tell us a little bit more about what you'll be talking about?
Sure, Trace. I do a lot of research on funds, and managed funds and ETFs in the metal and mining space. And essentially, managed funds, they started in 1956 with the Van Eck Gold Fund, and ETFs, they started in 2004 with the Spider Gold shares. And in the last 20 years, ETFs have exploded, taken all the money. There's $330 billion today in ETFs and only $28 billion in managed funds. So it's 13 times the size as in ETFs. This has some dramatic consequences on the market. It's inflationary for starters, because metal that's purchased goes into a warehouse and you're competing, adding to demand, competing with for instance, battery companies in the case of nickel. And the money that's buying those ETFs is not being used for exploration. So you're to some extent underinvesting in exploration. So you're adding to demand and providing less money to increase supply. That's one consequence. Another is that these actively managed funds have been dwarfed, and so they're not investing in the exploration side of the business, and so there's been an absence of new discoveries and a lack of exploration funding. That's supported by this tremendous movement of capital into metal and mining ETFs, which are passive investments effectively and inflationary. In the case of the managed funds, we look at their asset allocations, and the most interesting thing for us is that they have low portfolio turnover, and they have longer hold periods than standard equity portfolios. This is gold funds. But their disclosures are governed by the laws of mutual funds and SICAVs. So they're required to disclose. So if you look at their asset allocations in their portfolio disclosures, you're getting comparative advantage, some real insights because they have longer hold periods. They buy and hold, and then they increase allocations over time or decrease over time. You can get some dramatic insights into what the best investment minds in the sector are thinking, because what they're doing with their money. So that's the $28 billion in managed funds. So basically, we're going to be talking about that, about those aspects of the fund market, the ETFs, the managed funds, and also bringing, doing some summary on our work with the Critical Mineral Institute that we do with you, and the nature of the critical minerals market internationally.
For those of you that would like to learn more about Stakeholder Gold, please go to the following website. And finally, as a special bonus for you today, if you click on the below link, you can access the PowerPoint that Christopher Berlet will be using for his presentation during PDAC 2025. Thank you, Christopher.
Thank you, Tracy.